What is up, everybody? Logan here again with another video, and I'm here with Vance again, and we're going to go over the Amplified Investing 2022 end of year report. And the last day that we took a trade was 12/30, and then of course everybody got to enjoy their New Year's, and we're starting some more trades for this year. I really do appreciate you coming back on, Vance. We did have a more of a rockier December, but we actually still ended up profitable overall if you did follow the strategy to the T with all the rolls, the fills, the hedges, and all of that. So we're going to get into this one, show you guys the trade setup, how we did this, and we have a video just like this for December, retracing most of the year's moves that we did, and then this is this December recap, and we're also going to have one at the end of January as well, and do a 3-month recap starting very soon as well. So I do appreciate you coming back on for this one, Vance, and I'm excited to see what we got in store for these guys.
Hey, I'm happy to be here, Logan. So yeah, 2022, the end of year report. Like Logan said, we're basically analyzing our numbers from the end of May through the end of December. So a nice good 6 months worth of data. If you didn't watch the last video, or if you just need a refresher, essentially, this is our trade setup. And the main thing is that it's an EM-based trade, not Delta-based. And we're taking 5 or 10 point wide spreads. It depends on whether we're going to take a call credit spread or a put credit spread, depending upon the movement on the day. Sometimes we will condor if the conditional setup is there. We also don't automatically stop out. We will roll most of the time. If we have to, we'll do a stop out, but most of the time we're going to do a roll, and that's primarily for capital preservation purposes. This is an example of the EM sheet that we use in the trading platform in the Discord. So one of our new features that we have added, and you can actually see it get discussed in the video that I did with Logan the other day, where we talk about the volatility levels in 2022. But we've added a new feature, which I call the historical volatility EM level, which right now is 45. And basically, it's just an extra buffer, if you will, for the expected move based on the actual moves the days are making, irregardless of what the printed expected move is. So it's kind of a reminder that, yeah, the EM might be 20 or it might be 31 day, but historically, we've had wider moves, and that number will change as the year progresses as well. So here's our trade performance metrics. What you can see here is that we're pretty evenly split amongst the CCSs and PCSs. We are in a bear market, so we're doing CCSs a little bit more frequently than maybe normal, but because we do tend to go against the grain a little bit, because you get more credit as the price is approaching your strike. So usually in a bear market, we're getting that downward swipe in the morning and then usually a retracement. We're a little bit off kilter with the PCSs being slightly more often than the CCSs. So,
which overall, right, is like pretty good in my opinion, just because usually in a bull market, you're not even doing call credit spreads more than maybe 20% of the time.
Yeah.
So, overall, like, I still think it's a pretty good split, and like you said, with a lot of the big moves happening overnight, we're able to get underneath those, and then we'll see a little bit of a retracement.
Yep, exactly. So the win-loss tracking is pretty phenomenal. Right now we have 114 total trades in the books. We have 110 wins compared to 4 losses, so that gives the win rate at a 96.49%. and a 3.51% loss rate. Now, I will throw out there that there is a caveat to this. So the way that we track rolls are when you have multiple rolls, we count the roll over the final ending product. So if you roll 2 or 3 times and then you lose, it counts as a loss. If you roll 2 or 3 times and you win, it counts as a net win. So going forward into next year, we're going to be changing the metric a little bit. The way we track it, so it's probably a little bit more realistic, if you will. It shouldn't change the overall skew, because basically what we're going to do is we're just not going to count rolls as a trade, because essentially you're closing the one trade as flat and then opening a new trade. So that's just how we're going to track it going forward. But for this iteration, that's how we're counting it right now.
Mhm.
So looking at our average entry credit by trade type, you can see that our PCSs are averaging on about 43 cents per entry, and a CCS is entering about 47 cents per entry per contract. So that actually comes out pretty even. It means that we're getting 45 cents pretty much every single time we go in there on average, which is pretty good.
Mhm.
Especially when you consider that you're closing for a 5 or 10 cent debit, you're still taking home $30 per trade, which is pretty phenomenal. As far as our closing debit values, this is basically the metrics of how we've closed trades. We had 51 trades that we held to expiration, 31 trades that we closed for 5 cents, 8 trades that we closed for 10 cents, 5 trades we closed for 15 cents, 1 trade we closed for 20, and then the other 18 trades were more than that. So essentially, the ones that closed for 18, most of those are going to be rolls or the occasional stop out loss. So you can see that the lion's share of them are under 20 cents, and still the vast majority of them don't close. So we generally don't like to hold trades to expiration because the market monster does like to come and gobble you up at the end of the day. I mean, like even today, the market was up and kept fluctuating, going back and forth, and it was chaotic if you were trying to get out of a trade and you were holding it. There were a couple times where we didn't know if the market was going to suck out or not. So we do like to close it whenever possible, but there's just times when you've got a large buffer, and if you've got a 70 or 80 point hedge, sometimes it doesn't make sense to give the market back money. So here's trading with the main fund. Essentially, the setup is that we're going to begin with $100,000 in funds, and each trade will have a maximum of $5,000 at risk. That will allow us to trade 10 contracts. That will change if we have to roll and widen. The risk may increase, obviously, to 10,000 or more, if need be to widen. However, that's not usually going to happen. So over 114 trades, the account grew from $100,000 to $126,860. So we did not compound at any point with this. It's just simply growing this, maintaining a 10 contract trade every single time. That means over 6 months, we had a 26.86% account growth, maintaining those 10 contracts every single time.
Better than the S&P.
Absolutely. That's what's crazy. And that's better than the S&P in some of the better years of the S&P.
Yeah, it really is.
So, and you can see that we ended on a high note. We had a little bit of a, not so much a drawdown, but we had some rolls in there where we had to pay a debit, and then we had to hedge it to get out of it. So the middle late December was kind of crazy, but it's still a really strong upward trend in growth. And it's definitely a positive and positive sign there. So
I think the one thing to note too is like with how crazy December was, just with the fluctuations, if you were a day trader, it was probably much more difficult than a lot of the previous months just because of the, expected move getting destroyed like 3 or 4 times what was expected, right? Like we'd have a 31 point expected move and we'd see a 90 point or 100 point day. So that's another thing, especially with the way that we trade based off the expected move in price levels. We would have a 3,800 support and we'd be at 37, 85 or 37.90, and it would slice through 3,800 like there wasn't even support there. So that's the one thing too, is this month was a lot more directional intraday, right? Well, it was very choppy overall, but as far as like intraday movements, very directional. Like we'd have a 2% up day, next day would be down 2.5%, right? Just completely given the move back. So overall, for like most day trading, especially when it is directional and credit spreads are a little bit more non-directional at times, that's the nice thing about them. So just even with that information to be able to be profitable in the month, even though it wasn't anything as spectacular as September was or October to November, even with it slowing down just a little bit overall, I'm just very happy with the performance in the in our 0 DTEs just because of how crazy the month was overall.
Yep. So looking forward to next year, we're gonna change it up a little bit. Basically, what we're gonna do is next year we are going to actually still track the metrics, but we're gonna run it under a simulated account. And what I mean by simulated is this: we are still going to take live trades. No trade that is ever posted here is going to be a fictitious trade, right? They're all live trades that either Logan, myself, or other members, perhaps Maz or other people in the Discord will take, right? So every different strategy, we will risk up to 5% in that specific strategy, right? And that way, what we can do is we can show actual account growth for a realistic account that a person, possibly a Discord member, might have. Right? I don't think there's a lot of people out there that are running around with $100,000 accounts that are joining up into Discord. There are some, right? But for the most part, what we want to show is that for the average everyday person, you know, that they can actually grow an account and make money trading.
Mm.
And like Logan said before, we're going to publish monthly and quarterly updates. And as usual, we're going to have a master spreadsheet that'll be available online. There'll be a link once we start publishing it that will track our trades, and it'll be online for everybody to see. So it'll be a full disclosure. You know, I like to run weeklies. We obviously do the 0 DTEs. So we're going to have a plethora of trades out there to help people.
Yeah, and I think the other thing I want to do this year too is Halcyon and I are working on a 1 DTE, and we really think that the short term duration would be very good this year, especially with the heavy interest in 0 DTEs going on, but also this market's still too crazy to hold things like longer than 5 days. So that's one thing we're looking at, is getting a 1 DTE strategy going as well, and just something like, if you had a good 0 DTE day, here's our 1 DTE and here's our plan with it. So that's another thing too, is instead of just seeing the 0 DTE trades that we take, you guys will be able to track and also look at, like Vance said, is weekly, and if any of the other traders do end up taking trades, you guys can see the performance and overall like what we're going for on it, which is cool. And that's what has me excited for 2023.
For sure, for sure. So closing thoughts, which is always something we like to do. So, and I've mentioned this before in other videos, I'll bring it again here. This year, please check your trade setups. There's a lot of trades that worked prior to 2022 that just aren't working right now. You have to double check and make sure that any strategy that was kind of pre-designed before this bear market still held up last year. If you back test it and it wasn't profitable in 2022, I'd wait until the market equilibrates and volatility dies down before you start trying to do it this year. Proper sizing. I know Logan likes to harp on it. I like to harp on it. It's probably the most important thing that happens around here. I see so many Discord members who blow up accounts and go from $50,000-$60,000 to being in trouble because they just put way too much into it. They just full ship the port, and that's just something that, you know, you got to reel it in a little bit.
Yeah, and I think the big thing with proper sizing is like from an emotional standpoint of like, when you're oversized, you can't make the proper decisions. And I say this all the time, but like, it really makes you feel like you're not in control of the trade anymore, even though you always are in full control of like any trade you've ever taken, any trade you've ever stopped out of, any trade you've ever managed, right? You as a trader, you're in full control. So when you're oversized and you can't make a decision, you have like the analysis paralysis, you're not in control anymore. So like mentally you're somewhere else. So that's really difficult. And that's why I always harp on proper sizing, because like you should be able to put a trade on and not feel anxious about it. If you feel anxious about it, you're definitely oversized.
Absolutely.
My thought process for if you have like really good emotional management.
Even with small gains, you can make a living trading. Reality of it is, if you're trading 10 contracts and you win 3 times, 4 times out of the week, and you bring home on average $25 every time you win, you're making $750 to $1,000 a week. You're going to break the bank? No. Can you make 50 to 40 to 50 to $60,000 a year trading? Absolutely. And once you make a little bit more, you can move up to 20 contracts. And if you're trading 20 contracts and you can win $25 per contract a day, that's your job full time. Like, you can easily make a living doing this. It's just a matter of understanding the emotional and the mental aspect of it, and getting your account to that level, and then having the ability to trade it confidently and not make, mental mistakes and, try to get rich quick, those types of errors.
Mm-hmm.
And part of that comes with this. Always have a plan to enter a trade and have a plan to exit a trade. The biggest thing that we see a lot is people will put on a trade and it'll start to go sideways. And one of the people in the Discord will ask, usually myself or Halcyon will ask, what was your plan? Like, what were you trying to accomplish? And it's met with kind of silence, right? So you should always have a plan, know why you entered the trade, know why you exited the trade. If it's a stop loss, if it's a roll, you should have a reason and a rationale to do it, and then follow it, right? And if you have that reason or rationale going into the trade, don't change it mid-trade because you have a gut feeling something's going to be different.
Mm-hmm.
And the last point is to be in control of your money. Um, it's your money, and you should always strive to be in control of it. If you have your money and it's working in a bank or it's working someplace where it's not doing it for you, consider, don't take it all out at once, but consider learning to trade and consider trying to find ways to grow that money, that isn't earning you like half a percentage point at a bank. There's tons of other options out there.
Absolutely. And one thing too, with being in control of your own money and just being somebody who wants to be more self-sufficient financially, and maybe you've been watching my channel or a bunch of other channels too, it's very important to take that sense of ownership if you feel like you can, because at the end of the day, it's your money, right? It's not the bank's money, and it's up to you to do what you want to do with it because you're in full control. But just even having the building blocks to do it yourself is just so beneficial, right? And I read a lot of real estate books, and in those they always talk about, everybody, once they get their first property, that's the most important thing, because once you have your first one, it gets you over the mental hurdle of getting one. And I think about that with trading, where it's like, if you've never traded a credit spread before, the best way to do it is just do it, right? Because once you trade your first one, you'll trade hundreds and hundreds of them, and they'll eventually just become so natural, and it'll just become a part of your life and your life skills. So that's the nice thing with being in control of your money, if you think you can handle it.
Absolutely.
Awesome. Well, did we go through everything that you wanted to touch on today, Vance?
I believe so. The only other thing I wanted to say, and I'm going to show myself out here for half a second, is if you haven't yet, stop by my new YouTube page. The link is right here on the page. It's at By the Numbers, and we make some really cool content there. It's analytic based, so if you like boring math stuff and some that excites you, it's definitely a page you to take a look at. I'm sure Logan will drop a link in the description, and check out our newest video that we did together on our 2022 analytical year in review, which is pretty cool as well. So other than that, I'm good. Thanks for having me on, sir.
Yeah, that was a super fun video, and I think it's really important for people to see and just take a look at how volatile this year was versus any other year, or at least 2022. For the first time in a long time, we haven't seen
Yep.
volatility that nuts, and we had a couple, the COVID crash, and we've had the 2018 pull down that they had as well in the markets, but overall,
Nothing sustained. Nothing sustained.
nothing sustained, right? It was always like, oh, just buy the dip, like we'll recover. And this was the first time that it just continued to drop. And, there's still going to be a lot of rate hikes this year, and they don't plan on any rate cuts. So just expect more volatility and just a lot of uncertainty. But I really do appreciate you guys getting all the way here. If you did make it this far, leave a duck emoji down in the comments. I think that'd be fun. Make sure to check out Vance's channel. I have that link down in the description. And then, yeah, make sure you guys leave a like and subscribe if you like the content. So overall, if you want to come join the Discord, trade with us, trade these 0DTEs, the link is below. But overall, just happy to get out of December alive because the accounts were, it was so volatile and the decision making was much tougher than a lot of the other months. But overall, I'm excited for this one. But I do appreciate you having on, Vance, or having you on. And that's going to be everything for us. And we will see you guys in the next video.